Hello, I'm Joao Simoes, host of the GigaBrain podcast. Here, we share real stories, strategies, and innovations from builders, operators, and thought leaders shaping the future of finance. Subscribe right now and follow us to stay ahead in crypto straight from the source. Thank you. Hello guys, and welcome back to another episode of GigaBrain podcast. Today we are here with Andrei and Monica from HyperSurface. HyperSurface is a DeFi structured products platform built on HyperEVM, bringing on-chain covered calls and cash-secured puts to crypto holders. Think institution yield strategies like BlackRock or JP Morgan, but fully on-chain, transparent, and available to anyone. Monica, Andrei, super excited to have you guys here. And to kickstart, please let us know a little bit about maybe your background. Why are you in crypto? What did you do before? And what led you to today for to build HyperSurface?
Hi, my name's Monica. I had a long and winding road to crypto, as I'm sure most people did. I studied statistics and economics. I worked in finance for a few years. I worked as a software engineer, and I was working at an e-commerce company doing database engineering. And one of my college friends called me and he was like, "Hey, would you like to start a blockchain?" This was in 2017. And so I joined the guys from the JP Morgan blockchain research team, and we started a project called Cadena. I worked on Cadena for 3 years. Got deep into proof of work land and learned all about the nitty gritty workings of consensus and blockchains. And then in 2020, in DeFi summer, I was like, this is everything coming together. This is like my TradFi background and my math and all of my database stuff all coming together. DeFi is the moment. And so I've been building DeFi products basically ever since. And Andrei and I started working together in like 2020. And in October of last year, we launched HyperSurface.
So my background, I started my career as a software engineer. I was focusing on enterprise. I did some consumer products, but I mostly worked on enterprise applications. And then I moved to the US 15 years ago, and I got into day trading because sort of like I had this business. I had the software business, and it was running, and I had a bunch of free time, and I started day trading and losing money. And I'm like, man, I'm supposed to be smart. Like I'm supposed to be, technically smart. Like why can't I figure this thing out? So after 2 years of losing money, I'm like, okay, I have to figure this out. So I got a job at a hedge fund. I went to work. I worked 3 years at the hedge fund. Learned a bunch about institutional finance, about derivatives, about more complicated products, structured products. And then sort of like crypto came along and around 2015, and then I basically, I realized, wow, Ethereum is going to change. When Ethereum came out, I thought it's going to change everything because I saw how institutional finance operates, sort of like cool and shiny on the outside, but on the inside is basically, at a fax machine level technology. So at least at that time, right? Maybe now things are improved, but I still, thought, wow, this is going to be a total game changer. And then I decided to join crypto full time, joined Coinbase, worked at Coinbase custody, integrating Ethereum, Bitcoin, bunch of other assets into custody. And then, sort of DeFi summer came, and I always was like, actually, you know what? Let me leave it for the later because I'm already spilling everything. But essentially, yes, and 2020, 2021, something like that, I left Coinbase to join Monica and start building in the derivative space. And that's what eventually led us to HyperSurface.
Cool. And how do you guys like split your job as founders? Like one is more focused on the tech part, the other more on strategy and business. Like how your dynamic works?
Andrei is an incredibly brilliant software engineer, product designer. I'm extremely lucky to get to work with him. So everything that I can do to free up his brain so that all he thinks about is like the coolest products that he can build and like how to build them. So it's basically like Andrei builds really cool things and then I just take care of all of the garbage. Mostly how it feels.
Yeah, almost.
I do
I'm also in the business
payroll.
side, and I know that the business side is so needed because you are like connecting all the dots. You know, like of course you need the structure, but you need to connect all the dots or the clients, everything. So that is 100%.
Well, we sort of, I think that we both kind of in the camp of kind of like founders need to wear all hats. It's it's too early to really segregate any roles. I think we do a bunch of stuff. Like we really don't have like a very well defined kind of boundaries between the roles, and kind of like whatever is needed, we would jump on it and try to do our best.
Of course, no, that's really perfect.
But we all use the product. I'm like trading on our site all the time, and every once in a while I'll come up with maybe a useful product suggestion, and then but we're always talking to our users, figuring out what needs to happen next, juggling priorities. We're pretty aligned, I would say, generally.
That's amazing. No, that's super important and great. And now digging deep into HyperSurface specifically. So what's the origin story here, and what is the problem that made you really say, let me build this? Because I know that you also had like a different product in the beginning, and then you pivoted in around January, if I'm not mistaken. So what made you think that now the covered calls and it's a thing, which I believe it's a thing. By the way, I love your product, so really happy about it. But I'm curious to know, like, what made you think that this is needed, and when was the eureka time, and why now?
Yeah, well, we launched HyperSurface in October, and it's been pretty consistent since then. We, once we decided that this is what we were going to do, and we launched it in middle of the fall last year, since then it's been just like all full steam ahead. But yes, it was sort of a long and meandering road in order to get to this point. I don't know, Andrei, do you want to talk about like the vision for HyperSurface?
Basically, yeah, I guess maybe I'm gonna start with the history. Maybe it will make it more clear why HyperSurface, because it's a product of a long journey. So for me, I guess my entry to DeFi options happened long before I met Monica. In 2018, at Consensus Conference, there was a hackathon, and me and my team, we won a prize there for building like a very simplistic kind of option settlement DeFi smart contracts on Ethereum. And since then, so sort of like my trading eventually, after first I started trading losing money, then I joined the hedge fund, learned a little bit, and then I kind of started venturing in derivatives, etc. And eventually found that options became my absolutely favorite instrument to trade, despite everyone so scared of them, and kind of like it has the stigma of like this super complicated instrument where you lose money quickly, something like that. For me, it turned out that is an instrument of choice. I've been successful with it many times, and sort of like I'm like and the way it works mechanically, it lends itself really well on DeFi, where it's just it's a well-defined sort of like outcome, and as long as the outcome is known, then the contract can automatically settle itself, and it seems like it can really scale and on the DeFi rail. So basically, initially our idea, back in the DeFi summer and like early days of DeFi, right? Everyone just thought it's so obvious that like every big financial primitive is just gonna migrate on DeFi. So we need lending, we need like margin trading, we need spot trading, et cetera. So options seemed like a no-brainer. So what we basically set out to do initially when we started our first project is we wanted to build basically on-chain, sort of like on-chain order book, on-chain deribit kind of protocol. Eventually, we started it with, because back then it was only Ethereum. There was no L2s. There was no everything was super expensive. So we thought, we need to start small. We kind of like looked at Uniswap and its early success, and we wanted to build something like that, but for options. But eventually, sort of like during this long journey and how the whole option space played out, that eventually the perps became the primary instrument of like leverage speculation, and options really never came. Institutions only now coming into the space, right? So it's more of an institutional kind of great product. And so what eventually we recognize is that if instead of thinking more kind of like, oh, this exists in TradFi, it obviously needs to exist in DeFi, so let's build it. Instead, we thought, okay, we need to approach it more like a real sort of like a market problem where there needs to be clear demand, there needs to be clear category of users who want this product. We clearly saw that speculation is taken by perps. People don't speculate using options and maybe there are reasons for that. I understand. But we saw that a really clear winning category in DeFi is yield, right? Earning yield is the thing, and from basically managing my own portfolio in TradFi, my stock portfolio, I used cover calls. I really got into cover calls. I love selling, strategically selling cover calls, not like in a dumb way, but when I want to, and I thought, wow, this is just an incredible instrument. And people have so much assets on chain. They have BTC, they have ETH, they have native assets, they have stable coins, and even you can earn some yield on stables. But if you have BTC or ETH or Hype, you are really out of luck. You can give your money to some sort of like vaults that's supposed to earn some yield. You don't really know what they do there. It's sort of like very opaque. But I thought that building a product that lets people actively sell cover calls and cash secure put themselves, so that they choose when to sell, they choose what strike to sell at, they choose the expiration according to their wants and needs and view of the market. I thought that that's going to be a really special product that people will love. So sort of like that's what led up to it. But yeah, I'll pause here.
Yeah, no. So we already touched barely on my next question, which is, so all these products already exist in TradFi, right? And why you think that it took so long for these products to start appearing now in DeFi, and why the demand right now in DeFi? It's because of the perps, as you said. Do you think it's just the institutions coming into play, or do you think that the market is just growing more?
Monica, I know I already took a lot of time, but if you don't mind.
I mean, I have a quick hypothesis, and then maybe you can elaborate. So like my hypothesis is that we needed to have a critical mass of assets that people actually wanted to hold in order to make a mature enough market for there to be a need for these more sophisticated yield products. But now it's not just Bitcoin and maybe Ethereum, but there's like a whole class of assets that people are interested in holding for the long term and generating yield on them. And like there were some structural issues that needed to be solved. There was like infrastructure problems that needed to be solved, and the demand had to be there. And so we've now finally reached this point where like demand and supply have like converged. So maybe Andrei, you want to elaborate?
Yeah, I think it's just this classical sort of chicken and egg problem. It's kind of like, let's say, I mean, the most sort of like maybe obvious example is like, let's say dating, right? You know that both men and women are looking for each other, but just because this is true, it doesn't mean that it's so trivial to create like a market where they can successfully find each other in a very easy way.
That's a very good example. That's a very good example.
Like in terms of that this gap, there is this gap, right? They're a group of, let's say in our case, right? There are sellers who have their own needs, and there are market makers who are buyers who have their own needs, and there exists this fundamental kind of gap between them. There is just a coincidence timing gap, right? Like, someone needs to be there to be waiting for someone to come and sell, right? There is also like various risks, etc. So to me, all of these problems essentially is like, okay, we know this market exists here. It doesn't mean we can trivially just like port it here. Yeah, we can build the infra, but to kickstart to solve the chicken and egg problem, to basically create like a strategy that bridges this gap and kind of kickstarts this like positive feedback loop that leads to the growth. I think this is not trivial. I feel like this is the area where startups operate. And that's what we've been trying to do essentially. And I think as we became more and more experienced founders, we sort of like, venture from being this naive, like, oh, this worked in TradFi, it must work in DeFi, we instead of like, okay, what is the strategy that's going to connect these dots and create this flow,
Yeah. No, it's a very, very fantastic answer. Thank you for those examples, because it's true. It's true. It's a very good answer. So my next point is,
yeah, maybe like less charged than the dating analogies, like Uber, right? Like there are drivers and there are people who want rides, but it's not necessarily clear how you're going to match them with each other. And they're never going to be able to find each other unless there's a centralized place for everybody to log in and connect with each other. So this is maybe like a less...
But the dating apps actually example is actually very deep problem, because the other day, this is completely off the topic, but it's true. Like the other day I was reading like an article about how all these companies from the dating apps like Tinder and Bumble and all these apps are trying to solve all these small problems of like connecting people by their interests and or by smaller and smaller details, because they want to increase the matches, right? And the right type of people and the right type of, you are looking for a specific person and this specific person is looking for a specific person, and they want to make the apps so granular that you can actually match in these specific things. So that is a great
options
example.
Are much less complicated. You only have like a strike price and expiration date.
Yeah, but it was still a good example.
I'd much rather have that problem than
it was still a good
problems.
example. It was still a good example. Anyways, so for a user that is not used to use options, can you explain how is the experience of using HyperSurface for example, first-time user that is listening to this podcast and wants to try it today? Like, how does it work? What can he or she expect, and what is the possible outcomes, and how do you see the flow of the user flow? If you can explain that,
Monica, please do it.
I feel like I'm much closer to like the dumb target users.
I'll start talking Greeks and it's game over.
No. So I am like the most naive user use case. I'm just like, I own some assets. I have some Bitcoin. I have some stables. I have some hype. And I'm going to hold those things anyway. So I would really like to be able to get some money. So usually I'll come to HyperSurface. I'll look at what is available and I'll be like, oh, you know what? Like the market's feeling really soft right now. I would be great if I bought more Bitcoin and hype at these prices. So I go in and I look at the cash secured put section and I'll look at Bitcoin and I'll look at hype and I'll be like, oh, these are going to expire in like 2 days and I can make like 170% APR on this one. And if I get exercised, it means that I'm going to be buying Bitcoin at like 68K. Like, that's great. Totally down with that. So then I'll sell some puts. And then if I don't get exercised, then I just get to keep the premium that HyperSurface pays me and I get all of my stables back. And if I do get exercised, then I get to keep the premium that HyperSurface paid me and I get a bunch of Bitcoin at a price that I would be happy to buy.
It's sort of like another analogy that could be helpful if people already familiar with limit order. So these are sort of like modified version with limit order that has different properties. The trade-off is this: with a regular limit order, let's say you want to buy Bitcoin at 70, something like that. You can create like a buy limit order at 70. The good thing about this order is that you can change and remove it at any time, and if price just dips quickly, then you're gonna buy the asset, and then the price bounces back, and now you're in profit. So that's great. But at the same time, if the price never dips there, then your limit order is sort of worthless. You didn't buy anything, you didn't make any money at all. You just kind of like wasted time. So the trade-off with cash secure put, let's say, which is like an analogy of buy limit order, is that you also set the price. You say, I want to buy Bitcoin at 70. You get paid the premium immediately for this commitment to buy. So unlike limit order, which is like you can remove it at any time with a cash secure put or cover call, this is a commitment until expiration date. So you committed to buying this asset on expiration date, and if the price never dips there, then you just keep the premium. So you made something. If the price ends up being below the 70, below the strike price, then you're going to buy Bitcoin at 70. And so you have the premium and the Bitcoin you bought at 70. So effectively you bought it at 70 minus premium. That's your total cost basis, right? So basically, this is the trade-off. Essentially, a limit order is kind of like is optional, meaning you can put it on, take it off anytime. Cover call puts is a commitment, but you get paid for that commitment. So for some people and for some situations, this trade-off, people may actually lean towards cover call puts, because for them, even if the price doesn't go where you want it to go, you still make money. And so that is sort of like the beauty of it.
So there is almost no negative trade-off. That's what you're saying.
Well, so the negative trade-off is that if I say, I'm going to put this order in to buy Bitcoin at 70, and then Bitcoin goes to 65, I still have to buy it at 70 because that was the commitment that I made.
Got it.
But with limit orders is the same, right? Essentially, if you put a limit order at 65 and Bitcoin just like crashes through it, you still buy at 65. So it's sort of like, yeah. It depends on what you compare it to. Essentially, what I believe that, and we can go into it more if you want, but like basically there is so much misconceptions around this instrument, and they mostly stem with people analyzing it from just pure statistical perspective. They say, well, statistically speaking, the EV after spread is negative. Well, obviously, statistically speaking, doing any random thing randomly is also, doesn't have a positive EV. So here it's more, what do you compare it with? And I think what you need to compare it to is the limit orders, right? You can just basically put limit order this way or that way, and you choose what you prefer, and depending on the trade-offs, you may want to get paid or not get paid. That's all.
Right. Okay, perfect. Beautiful answer. So my next question, I already know the answer for this one, but it's something that I always ask to all the teams that we interview is, why build it on Hyperliquid? So why Hyperliquid, and why not any other infra or chain to build this?
Well, I can answer that from a very technical perspective, because essentially Hyperliquid is the only thing that exists right now that has simultaneously a very deep perps and pretty good spot liquidity. And it has this EVM chain, which enables you to build smart contract applications. And they have this special integration between EVM and Core. Core is the main Hyperliquid, and EVM is the EVM chain. So we live on EVM, and through this special integration that's called Core Writer and Core Reader, a smart contract can trade on Hyperliquid without having to move funds into a user-controlled address. And so this is very unique and very special, and that what allows us to do is, because our protocol, in order to function, it needs to delta hedge either on spot or on perps, and that this enables a protocol to basically use Hyperliquid liquidity and delta hedge in a fully non-custodial way, without essentially taking the user funds into externally controlled address, and the contract itself is performing the actions. And this is what's super unique, innovation that basically enables things like ours to exist. And Hyperliquid is the very first place where this is possible.
Beautiful answer.
I'll answer that question from a vibes perspective.
Vibes perspective. I love that.
Right?
The BD perspective.
Exactly. So Hyperliquid started as perps trading, right? And then they built the chain later. So from like a user-based perspective, if you're looking for people who are comfortable with DeFi, are native to messing around with assets on chain, and who are interested in speculating with derivatives, Hyper EVM is like a built-in perfect ecosystem for us to bring this kind of like very sophisticated DeFi product. And so it's like both got the tech that we need, but it also has the community that we need. It has the user base, and you go to a Hyper EVM event and I tell people that we are building an options product and they're like, oh my God, that's so cool. Tell me all about it. And like go to some like regular Ethereum event and you're like options. They're like, what's that about? So yeah, it's perfect for both. It's the tech we need, but it's also the vibes that we need.
100% agree. So you guys crossed 45 million in cumulative volume, if not mistaken. And what's the driving real usage versus airdrop farming? Like, do you think that this is real usage, like it will drop? It's just airdrop farmers. Like, how do you see this interconnection?
I have if you don't mind, Monica, I will answer because I have a very kind of a bit of I'm passionate about this answer because I think that one thing that people don't understand about us is that they put us in a bucket of derivatives. They say, oh, this is options. It means derivatives. It means it's comparable to perps. So they look at this volume, let's say 45 million, and they think, oh, okay, well, comparing to perps is nothing, and that. What people don't understand is that this is not a leverage product at all. It's a fully secured, fully covered product where a person needs to deposit a full amount of the underlying collateral and hold it there for the duration of the option, right? So it's not a perp platform where you can farm it by just going in and out of position in a programmatic, write a bot that does some stupid thing, and you only need, a small fractions of the notional volume. Like you put down $100 in a perp exchange, you can generate like millions of dollars of notional volume with that. So obviously the volumes there are so inflated, especially when people farm it. In our case, you have to basically, you put down $1 million worth of hype inside of the contract, you get paid, a couple $1,000 premium for dependent on the duration, and then you have to hold your contract there. You can just like recycle it every second. So I think it's quite difficult to farm. Like we are basically the worst thing to farm ever, because it's like it's locked up, it's slow, it requires lots of collateral. So I think for us, 45 million is actually a very significant. It means that people actually cycled 45 million worth of real assets. It's not just inflated notional volume. So yeah, that's where, because I'm kind of like passionate about it, because I think that a lot of, especially investors, they misunderstand that nuance. And yeah, so yeah, I doubt anyone would farm in us on purpose, because that would be the worst decision.
Perfect.
Yeah, I mean, people use our product because people use our product because it makes them money, and then once they start using it, it's super, super sticky. We have like an average of 11 to 12 trades per address. That's like every time somebody comes to our platform, they're like, oh my God, I can just like place some limit orders and get paid money. This is great.
Yeah, basically it's kind of like Facebook. I remember back in the day, like when they just started, I remember from interview Mark Zuckerberg, he said their metric was that what they discovered is like, if something, I might be butchering it, but something around like, if a person added 5 friends, it is likely now that they're gonna keep using it. So they would do everything. Like they had this basically metric where once the user achieved this milestone, they're more likely to become a permanent user. And so in our case, what we observe is basically once the user did one trade, they're likely to do more. Something like that. It's super sticky. Like we have this one guy, he came in January, he has about 2 million worth of hype.
The one you showed me, right? Before in our call, right?
Yes, and he basically made in like 3 months, less than 3 months, he made over 500K in profit, just by like selling very actively every day. Price pumps, he sell calls. Price dumps, he sell puts. Very very strategic, and I feel this is why people use it because they just making money. It's weird. We looked at the aggregated statistics, and basically on average, our user is actually profitable. So like our average user is making money. At the same time, the protocol itself, the liquidity pool also made money. So I'm like, this is weird. It's like we created some kind of non-zero sum game here. It's just something doesn't make sense.
No, I love that, and yeah. So my next questions, I'm going to look here for some market trends and market questions, and even yesterday I was in this AMA with Monica, and we talked about the Kelp DAO incident, right? So more than 200 million just got wiped, and I actually yesterday saw an article that these 200 mil were actually funneled to Torchain, and then they were spread out to multiple BTC wallets, and then they bought BTC. Actually, they swapped and bought BTC, and that's what initiated the pump. But in any case, then you have Aave, which lost about 10 billion in withdrawals. So how do you see this DeFi ecosystem, DeFi market nowadays, especially because you are building in DeFi? We are also building in DeFi, and we are scared, like we are scared. So I'm also curious about, like, after you reading all these news over and over, and every month is a new hack, how do you prepare yourselves, and how do you feel as a company that what can you do, or what can you prepare for the future? How do you foresee the future in DeFi, for example?
It's very hard to sleep at night. I'm going to be honest. At this point, I feel like we have a really, really strong obligation to our users to be as up to date as possible with using these same tools, AI, all of the top cutting edge of all of these products, in order to be constantly reevaluating ourselves for security threats, evaluating our wallet security, our deployment security, and because it's so easy for the people to examine an attack surface now in ways that it was not possible before. And so we just shipped a big security upgrade last week, and this is now something that we think about a lot. And so, as we continue to grow, and we continue to, we're making a big push into the vault space, and that's going to mean, storing even more people's money on chain. It's, continue to be committed to protecting people as much as possible.
Yeah. Andrei, you want to comment here too?
Yeah, to be honest, for me, this is the thing that I would say I lose sleep the most because of. It is in general not only about like our product, but DeFi as a whole. To me, this seems to be structurally the biggest weakness of DeFi, and the biggest reason why it can potentially not grow or not become what we all want it to become. On a hopeful side, I'm thinking that, just like AI allows attackers to perform better attacks, it should also allow us to build products and sort of like more like at the systemic, at the infra level, things that prevent attacks, or that make it harder to do something. The way I'm thinking is like, let's say take Plane, for example. Plane is just an incredibly complicated system where like there are so many points of failure, and the cost of failure is incredibly high, right? So like, yet, there are like, I don't know the numbers, but there are like thousands of planes flying every day, right? In terms of, it took us a while to get there, but the industry basically has a ways of building these hardened systems. And I believe that's what's going to happen. The question is just like how soon we will be there.
Yeah, one thing that sometimes even on our side, some LPs started to ask is, can you do it non-custodial? Can you start building everything non-custodial? Like, we don't want to move the money anywhere, or we just want to use like Fireblocks for everything. Like, can you guys do that in HyperSurface? Is that even possible?
In a fully non-custodial way, that's the goal. That's absolutely the goal. Like my goal is to not have any ability to control to touch user funds at all. Not through multi-sigs, not for anything right now, because right now I subscribe to Jesse Walden from Variant Fund. He wrote this thing a long time ago about progressive decentralization. I still believe in this. I think that in the early days you need the flexibility to iterate. The thing you are building is still it's a highly experimental, cutting edge protocol. You need to be able to iterate on it and fix things and address issues. Right? It's very difficult to just build something and that's set and forget. So, but eventually, once the system becomes hardened, once it becomes sort of like mature and finalized, I think the goal is to completely decentralize it and let it run fully autonomously. And if it relies on some oracles, etc., those are sort of like, this is the infra that you can use. And but I think that is ultimately the goal. But we can talk more about it. I think there are a bunch of nuances, but essentially,
I completely understand. I have a more like general question for you guys, which is the biggest lesson that you learned by building in DeFi so far, for any builders that are out there listening.
We may have different answers, but I think my answer is to remain like relentlessly focused on what users are actually using. And not like get distracted by like, well, if we build this thing, then people are going to come and use it. But like for us, the real unlock for HyperSurface was realizing that this market already exists, but it's only available in OTC. Like people already sell calls and puts on assets, but it's only for people who have like 10 million in assets who can work with a market maker. And so this market is already robust and already exists, rather than trying to like make a product that's speculative, whether people want it or not. Like it's just
I love your
to be
product,
relentlessly focused on users.
Digging more and more into your product and talking a lot with you guys, doing the AMAs and everything, and like I really like your product. So like, it's really congrats on there. So it's really good one. Andrei, what's your biggest lesson here?
I actually, interestingly, that we kind of match in that. I had the same in mind, that I'm, as an engineering person, I sort of like have this tendency to just obsess with like beautiful engineering concepts, and I think that the one thing I learned is that kind of like focusing more on high level strategy, focusing more on the market is, to me, this is the higher priority thing than let's say just like building something just like sounds and look cool. Like how back in the day, like in the ICO era, all you needed is to create like white paper with a bunch of like cool looking formulas, and everyone just throwing money at this thing. and how many of them like actually worked out? And so, to me, kind of like shifting perspective towards more of a like being grounded in the reality of the market. I think that's definitely just like a sound advice that I would give. Yeah.
I love that. So last question before we wrap it up. Are we in a bull market, bear market, and your price prediction for hype? So 2 questions for each one of you guys.
Is crab market an option? I feel like we're in this place where it's just like creep.
So I can give you the answer that I've been giving in like all these podcasts. I just think that we are in a political cycle. I don't think we are in a bull or bear market. I think we are in almost a Twitter market, because every day Trump or Elon goes on Twitter and they just write something and the market shift towards that or away from that, right? So it's a completely political market, I'll say, political cycle. It's very much influenced by wars and politicians' opinions. So that's the way I see it. And I'm still believe that we are kind of bullish, I'll say, but it's a very political market. But that's my take. So I want to know your take, Andrei. What do you think?
I sort of tend not to think about this at all, because I feel what I feel more is this: conceptually, what is the best? I feel like what is the best thing for whatever the best strategy for me, right? For me, the best strategy that I found is this. If I keep doing something despite it thriving or actually experiencing like hard times, and I just keep going and keep doing it, then this puts me in a competitive advantage versus someone who just jumps on a hype train when things are popping. Like I'm already better off because like I'm buying in a bear market, I'm building in the bear market, you know. So for me, my question is more like, what do I believe in fundamentally? Like, what do I see? How do I see the future is playing out, and what things are going to be needed in the future? And just to being kind of like passionate building those things. And I think that like the oscillations of the market is a virtue, like it's a benefit for a person like that. For a committed person, the oscillation, the volatility is great because it lets you basically, you can monetize volatility basically, right?
I love this. Yeah. This is why Andrei and I are still working together after all of these years, because on this like very fundamental point, we are aligned. Be early and then hold your conviction, which is why we're still here and we're still building.
I love that. What about price predictions? Do you have any price predictions for hype?
I mean, I think $100 hype, easy, no problem. Because like in the market right now, the only things that I believe in, like I'm buying Bitcoin and I'm buying hype.
The
And, like,
Arthur
everything
Hayes
else,
strategy.
I'm like,
Arthur Hayes strategy.
I don't know.
BTC
Yeah,
and hype.
exactly.
BTC and hype. Let's go. That's it. That's it.
I'm running the Arthur strategy, which is buy a house in Japan, snowboard every day, and buy hype in Bitcoin.
Yes.
I don't snowboard yet, but
that's it. That's it. I think he's a ski guy. He's a ski guy, not a snowboard
does
guy.
he
But
ski?
yeah,
Okay.
that's it. That's it.
Yeah, I think 100 is definitely doable. I mean, things like this, they kind of sort of like almost like binaries. It either something else comes along and like overtake it. But I think I like their strategy of becoming this open platform and let other builds on top of it. And that the fact that even like some venues, like, you know, Trade XYZ, printing a bunch of their own volume powered by Hyperliquid infra. And now like, I believe Kalshi is the launching perps based on Hyperliquid. If Hyperliquid becomes that, you know, sort of like the liquidity layer for the global liquidity layer for all these things, it can be huge, right? It can be insane. I also am emotionally connected to Hyperliquid ecosystem. To me, I feel like this is the type of people I always dreamed of, you know, working with in crypto. Because like, I mean, don't get me wrong, I love infra. Infra is great, but I also love finance. And so like basically being in an ecosystem that is like financial hub, where people simultaneously are builders, but also like understand finance and are excited about finance. Yeah, I'm kind of like, I'm totally a Hyperliquid guy. So I'm bullish.
Amazing. Guys, so we are reaching the end. I want to know if you have any alpha to share with our listeners, if you want to share anything like roadmap, the next few months, what are you planning for end of Q2, Q3, Q4 this year? Feel free to share.
Well, we're working on something, we're cooking something pretty big right now, which is exciting. I like sort of teased it earlier, but it's based in the vault space. We want to give people like an even simpler way to earn yield on their assets. So yeah, that's in progress. It's a huge engineering lift. It's a major upgrade for the protocol, and it also involves like all kinds of business shenanigans. So yeah, that's going to be shipping, I don't know, couple months maybe.
Yep.
Yeah.
Something like that.
Yeah.
Yep. Yes, definitely. Yes. Very exciting sort of like
So
rollout.
lots of machinations happening.
Okay. Perfect. Guys, again, thank you so much for coming here today to talk. Also, feel free to shout out your website, Twitter, anything for the audience to search you guys.
Yeah, well, it's HyperSurface.io. That's us. And we're HyperSurface X on Twitter. It's pretty easy.
Amazing.
Well,
Perfect. Guys, thank you once again for this beautiful episode. And for anyone listening, go check these guys out. They are super, super legit, super, super cool. And I will catch you in the next one. Thank you, guys. Cheers.
Thanks, you all.
Thank you.
Thank you.
Bye.
GigaBrain is brought to you by Swell Labs. To find out more about Swell, go to swellnetwork.io and make sure to search for GigaBrain in Apple Podcasts, Spotify, or wherever you listen to podcasts. Hit the follow button so you don't miss any future episodes. Thanks for listening.